So looking ahead to the fall, when you come back from vacation, what's the first thing you're going to look for to get some window onto the economy?
Well, I mean, everybody looks at the stock market. I mean, the stock market is not doing well right now. It seems to have taken had a bad reaction to the debt ceiling process. There is a fear of a double-dip recession, and you'd be looking at those sort of large macroeconomic indicators. You also want to see, for our crowd here, what are the financing markets doing? Are deals getting financed? Are there bond issues that are going through? Are the prices decent? Have the debt markets reacted to some of these debt fears around the world? And to the fears of another recession. I mean, that's really the overriding sort of issue at this point. It's hanging over everything. Will this be in the famous cliche that everybody's using these days, will this be 1937 again?
What do you think? Will it be 1937?
Right now, the signs aren't very good. It's not so much anything specific about the debt ceiling crisis. It is that the debt ceiling crisis sort of brought to the surface a lot of concerns that were already there. There's not a lot of cost cutting built into the front end of this process. There's a lot of numbers, but in actual cuts, it's not enough to sort of stall the economy. But the economy might have been stalling anyway. And then on top of that, you have all these other problems that in this world of ours. Europe is sort of a mess, and there is again signs that Spain and Italy are having problems. The Greek situation continues to sit there, and by the time I come back, it'll be close to September, and if we've learned anything in the last few years, the fall in financial markets are always extremely tricky. The Lehman Brothers problem and all that 2008 problem was really an issue in the fall. So it's a little bit of a precarious time, I think.